The most exciting jobs in finance aren't in banking anymore. They aren't in hedge funds either. Electronic trading firm Jane Street just had the best quarterly net revenues in the history of Wall Street. But how did it do it? We'll cover this and more on the Coffee Run. Every day on eFinancialCareers, we give you a rundown of news in banking, finance and beyond on morning coffee. On the Coffee Run, we break down the biggest story of the week and let you know other important stories you might have missed. This week's top story, as reported by Bloomberg, is that Jane Street generated $10.1 billion in net trading revenue in the second quarter of 2025. For reference, Jane Street generated $10.6 billion in the entirety of 2024. Jane Street is one of a myriad of quantitative trading firms known as prop trading firms. Others include Hudson River Trading in New York, Citadel Securities in Miami, and European firms like Optiva and XTX Markets. These firms have been around for quite a while now. Jane Street itself is multiple decades old, but they've only really come to the forefront of finance in recent years. Quant trading has been around for a while, but what separated these firms was the frequency at which they traded. Trades were optimized down to a matter of microseconds to allow them to capitalize on price inefficiencies that nobody else could. This garnered them the nickname Flash Boys. Fast forward to today, and these firms have invested a lot of money into building out their infrastructure and hiring elite talent. They're also pushing out of the pure high-frequency trading space and into lower and mid-frequency trading. Many of these firms also engage in electronic market making. They hold massive amounts of an asset like US equities, and they facilitate trades between other parties. They quote buyers one price, sellers another, and they pocket the difference. How have they made $10 billion though? For one, the firm has been rapidly expanding. It has thousands of employees now spread across London, New York, Hong Kong, India, and beyond. It hires the best people and pays them very, very well. Last year, it paid global staff an average of $1.4 million each. Their internships are highly coveted, and even they pay well. Not just the traders and quant researchers, even engineering interns get $5,800 per week. It's growing too, with 215 jobs currently posted on its site and newer, larger offices soon to be opened in London and Singapore. Despite this, or perhaps because of it, the firm has an insane profit margin of 69%. The major banks rarely exceed margins of 30%, while smaller banks fare much worse. Jane Street's margin was even bigger than other prop trading firms. Hudson River Trading had a margin of 59%, while Citadel Securities operated at 47% in the second quarter. Jane Street is a pretty secretive firm. You have to be if you want to make that much money with that few people. But one of its more lucrative strategies was unceremoniously revealed when Indian regulator SEBI accused Jane Street of market manipulation. It was alleged that Jane Street would buy large amounts of the component stocks of an ETF, the Bank Nifty Index Fund, on the Indian Stock Exchange. They would sell them then all at once to drive down the price of the ETF, all the while shorting it. That's at least what SEBI alleges, but Jane Street is saying it did nothing wrong. Still, the case has raised eyebrows throughout the industry. Alex Gurko, CEO of rival firm XTX Markets, questioned whether the firm's Indian compliance department was intentionally staffed with Muppets, and said the whole thing appears to stink very badly. Gurko said that XTX closed its own Indian options trading business in early 2015, after its Sharpe ratio mysteriously went from 10 to 0 overnight. These strategies can have nuclear returns. It was thought to have been orchestrated by just 2 traders, but thought to have made $150 million in just 3 months. That's not the only big story in finance this week. Goldman Sachs has said there's plenty of excitement in banking jobs too, by predicting the next year will have an all-time high of M&A activity. Bloomberg reports that Tim Ingrassia, co-chairman of M&A at the bank, has predicted a deal flow of $3.9 trillion. Deal flow is already picking up to an extent. The actual number of deals hasn't changed much since this time last year, But there are more high-value ones, like Google's $2.4 billion acquisition of AI firm Windsurf. If you want similar pay to Jane Street's traders, you could try working at oil and commodities trading firm Vitol. The firm has a shared ownership structure that has paid $20 billion to 600 of its top traders over the past 3 years. That averages out to roughly $2 million per head per year, and it might be more evenly dispersed than you think. Vitol's ownership structure makes it so that nobody is allowed to own more than 5% of the company. It's not a billionaire factory just yet, but it's making plenty of millionaires. They're seemingly humble millionaires though. Former employees say Vitol has a collegiate atmosphere with no flashy personalities or people talking about how much money they're making. And British bank Lloyds has been undergoing a major cultural shift since it brought in ex-McKinsey partner Charlie Nunn as its CEO 4 years ago. The bank is reportedly planning another major change reminiscent of Goldman Sachs. Nunn is reportedly planning to cull 2.5% of underperformers on a yearly basis. Goldman Sachs does a similar thing to 5% of its employees each year. Nunn also got some flack for cutting all bonuses on the year he arrived, and more recently, for making the bank's engineers do coding tests that could see them leave the bank if they failed. And the top story from us at eFinancialCareers concerns Jane Street rival Citadel Securities. The firm spent $1.81 billion on compensation in the first half of 2025. Despite comparatively worse performance than Jane Street, it's on track to pay its staff $2 million each. Thank you for watching The Coffee Run. If you want to check out our articles, you can go to eFinancialCareers.com, or you can subscribe to our newsletter by following the link below. You can also like this video and subscribe to the channel if you want to get more news updates like this every Friday.